Infosys, Apurva Prasad, the research analyst at HDFC Securities, is with us on the show. Apurva, first, have you lowered your full-year revenue forecast for Infosys? If yes, by how much? And how does the stock look if it does open with a cut of 4 to 5%?
Good morning. Thanks for having me. So, Reema, we have lowered our estimates. So, Infosys, we have cut that by about 3% or so, which is how much we have cut our fair value on Infosys. It's mostly a function of second half, which is going to be weaker than expected, as well as the deal conversion, which is taking longer. Some of the mega deals that they've got. About 3% cut in case of Infosys, about 1 to 1.5% cut in case of HCLTech, and about 0.5% cut earlier. TCS.
And valuations? How do the valuations for the company look now? Because you've cut your EPS estimates by 3%, so that changes the PE.
Yeah, so valuations, Reema, long-term averages, so 21 times and 19 times FY25, 26. So pretty much, if you sort of look at last 5-year, 10-year average, it's pretty much in that ballpark range. HCLTech would be at a slight premium to their own long-term average, but then there are some reasons why they should be that they're paying out a lot more. There is a lot more free cash generation as compared to historically. We benchmark that to historical valuation. It's probably slight premium in case of HCLTech. Infosys is pretty much in line with their long-term valuations. I think the mega deals they've got that does give you good visibility for FY25. So if you X that out of FY25 growth rate, which is about 6.5% in case of Infosys and double-digit for HCLTech, you're still looking at a very modest recovery.
Hi, Apurva. Good morning. Good to see you in. Nigel on this side. We've got 3 disappointments, actually. TCS, Infosys, HCLTech. All the 3 stocks, are a little bit under pressure, or they were under pressure yesterday as well. Would you be a buyer? I mean, what's the official call that you'll have?
Morning, Nigel. So we've been saying that, look, the recent sort of outperformance that preceded this was more a function of multiples that went up, and it was probably more tactical, more a case of allocation, catch up to Accenture valuations and so on. And it was not really, earnings led, and therefore we were expecting a limited absolute upside in the near term. So I think that stands. That does not change. Some of the macro stress. I mean, the big news really is that not much has changed over the past 2 to 3 months. So I think that sort of remains. The big positive, if you can bucket it under 2 things, is one, the mega deals, even though those get delayed, ramp-ups of those does give you good visibility onto FY25. And on the operational side also, with attrition coming up significantly and cost of replacement not being as high as earlier, I think some of those metrics are playing out, and which is why you see companies like Infosys and HCLTech talking about improving their margin trajectory even beyond FY24.
Right.
So we do maintain our ad on that. I mentioned the earnings cut that we've done.
All right, quickly before we let you go, Apurva, your thoughts on Infosys, the acquisition that they've made, a US-based company, Sonic Partners, for about $132.5 million in cash?
Yeah, so I think what's happening in case of Infosys is there has been a lot more non-BFSI focus. They were sort of more over-indexed to the BFSI side. I think they're trying to diversify the portfolio there. And what it does for Infosys is H2 visibility is increased, and that's more coming from the bookings that they had, the 700 million plus TCV which they had in the previous quarter. They, of course, have been getting impacted with the mortgage business, which has been dragging their overall growth. But I mean, incrementally, the growth prospects are looking stronger for Infosys as they diversify outside BFSI.
Any read-through for the rest of the IT pack, quickly?
Reema, so I think comms continues to be fairly weak. I think that's whether it's an Accenture, most of the companies have been, I think that's a sort of common line. So TechM, it certainly has a much bigger portfolio for Tech Mahindra, so that would certainly be a negative read-through, which has been happening over the past few quarters, I would say. And yeah, again, some of the sub-segments within BFSI, incrementally commentary is not improved. So again, with some of the tier ones, I think are relatively more exposed. So I think that's the nature of it. Having said that, if you see HCLTech, BFSI has been outperforming. Compare that with some of the peers. So we are company specific, it will be there. But yeah, I think comms being weak can be certainly one thing.
Okay, Apurva, thank you very much for joining in.